The financial markets can be a scary place, and they don't rest for anybody. Our goal here at A1 Trading is to bring you coverage every day, so you can be up to speed on the latest market moves. Before the show begins, remember that trading involves risk, and that anything shared in our content should not be construed as financial advice.
5, 4, 3, 2, 1.
Where does the allocation of funds happen right now?
And it'll go exactly where you want it to go. The next bit, after that, you'll enter and then it'll go up.
How would you enter, right? What if you're new to order blocks? What if you're nervous, right? Let's say.
And the correction moves is in the A, B, C move.
Today's stream is made possible by our partners and sponsors. If you're looking for a new broker, trying to get funded, or looking for a trading community to join, consider checking out the links in the description below. By using these links, you'll get access to great products and be supporting the channel. Without further ado, the show is about to begin.
Good afternoon. Afternoon, everybody. Hope you are well, or good morning, good afternoon, evening, wherever you are coming from. Let me know if I'm coming through okay. I noticed last week I had the wrong mic on, so I was using my mic from my webcam rather than this one right here. So let me know if I'm coming through okay. You can hear me clearly. Who's in the room? Shakzod, Big Shark from Ghana, currently watching from UAE. That's where I am as well, Dubai. Laronica, Sahel, there's tough names in here. Ayobabam, Catherine, Max, Chris, Forex Wolves, MD. Good to see you guys. Hope you are all well and trading safely. Thanks, Ben. Appreciate that, mate. Thanks. Okay, let's get into the market, shall we? We're having a little bit of, there's some comments about why is the yen strong? Why is, when it's a risk-on environment? It certainly is a risk-on environment, right? From an SPX perspective, from Jersey. It's my dream to meet you one day. That's very nice, mate. Making me feel like a celebrity. I'm certainly not that. Anyway, so we pushed through this daily anchor on the SPX. Stock market's pushing, and it certainly looks quite good to the upside. However, we've seen some massive moves in this yen pair, specifically the yen pair and the Swiss pair as well, over the last couple of weeks, which is why we're possibly seeing some pullbacks. So yes, it's risk on, which means we should be looking at the Aussie, the CAD, and New Zealand, right, against the yen, against the Swiss, potentially post-COVID, and the US dollar. But if we go over to the New Zealand yen, for example, or the Aussie yen, let's go to the Aussie yen. That's probably an easy place to start. The most probably risk-off currency, or risk-off currency and risk-on currency. Look at the move we've had. Right, look at the move we've had here. An absolute belter of a move to the upside. We cannot expect this to continue, right? We're not expecting this to just go up and up and up and up. Markets don't work like that. So what we're possibly seeing, and what we could see from a few of the daily candles yesterday, was some wicks to the upside. So, and if we noticed, again, just looking at Aussie yen here, notice the candles moving to the upside. We're closing pretty much on the highs of each day, apart from what we got yesterday. So when I was streaming this morning, as I said, I'm a London session trader. I do my streams about 8 or 9 hours ago from now. It's 6 o'clock here in the UAE. And I was thinking that possibly we could be in for some pullback action from these moves. And that seems to be, at the moment, what we're getting. So it's not as if for me saying, well, New Zealand's coming strong. It's just pullback action. Healthy trends, push up, correct, push up, correct, push up. And we're just in that possible correction phase. Now, if we look at the, I'm purely technical, right? From a personal standpoint, I'm purely technical. I don't really care about what's happening fundamentally. Whatever will happen, I stick to what I'm good at, and that's the charts. For me personally, as I said, I'm looking at it from a technical perspective. Okay, you could say fundamental this and fundamental that, but for me, it's just, it needs a pullback. We're seeing massive extensions here between this 20 and price action, and it needs to healthen itself up, really. So that's my personal opinion on it, because we are seeing risk on nature in the markets, which doesn't support buying the yen. Okay, if we have a look at the dollar, but what's interesting is we see here on US Open, we are getting a little bit of bearish price action, or certainly a bearish candle here, a little bit of rejection to the upside. I don't particularly like this price action from here. Indexes do move slightly different from normal Forex or currency pairs. So what are we expecting over the US session in terms of the index? I think we see some slight pullback. We have moved quite decently. So I think we see some slight pullback, and I think it will be possibly a pullback week from now on, possibly even into next week as we digest those larger moves on the daily charts. Okay, if we go into dollar, so I'll talk about the dollar. I'll talk a bit about my personal trading because there's something that happened this week with my personal trading when I want to go go into the psychological side a little bit. But the dollar is absolutely melting, which, to be honest, I did not expect. London Open, we were in this pullback. I thought possibly we'd get a deeper pullback back to around that 50 from this impulse and we push up. But the dollar right now is certainly melting to the downside. From a daily perspective, depending on how we close, if we do get a closure like this, it wouldn't look great considering the path of least resistance is to the upside, but you would have expected this dollar from a technical perspective to certainly push through, but not close like this. So that puts a little bit of spanner in the works and would certainly change the bias of dollar longs to dollar shorts. But let's see, again, this is important. Let's see how that daily candle does close. So certainly intraday, whether I'll be selling the dollar or selling the DXY right now, probably not. I think the moves happened, but it's certainly shifted that stance on the DXY. So this is what I was looking at today, and I want to go through EU first. If you want me to look at anything, put it in the chat. I know, Max, you just said EU. So this morning, I was looking at EU longs. I didn't get involved in them. It didn't quite set up for me. But if I go into, because some of you might be new, if I go into what I was looking at, if we look at this price action here from this key area, okay, what I'm calling this is, it's for me personally, it's a head and shoulders with a V reversal, but we can call this a V reversal, cup with handle, whatever it is. It's essentially a squeeze into this area. So it's kind of hard to see because that has messed things up a bit. But if I zoom back here we go. So if we look at this from here, we're just seeing a squeeze into this area. Okay, so this for me is really nice. So I was looking at this for a potential breakout retest. We got the breakout. We didn't get the retest that I liked, but price action was quite good. I'm very big on higher time frame confluence, right? So for me, I would need this a steady state retest and then a catalyst for entry. It was a little bit messy at this point in time, but it did indeed move to the upside. But let me tell you in terms of higher time frame confluence why I liked it. If we move to this daily chart, I'll look at gold, Max. Gold and oil. Yep, I had a potential trade in oil shorts yesterday, Ben. I didn't actually get that one either. So it's not been. I've had a few setups the past 2-3 weeks where I've almost got them. They've gone in the direction I thought, but I've not managed to actually get on board with them, which is frustrating for me. So you get the analysis right, you get the directional bias right, but it doesn't quite fit my entry setup criteria, so I can't take them. But if you look at EU, so let's look at this. So if we go from a basic technical standpoint, we're on impulse and potential corrective, right? Now we kind of broke out from this potential corrective at this point in time and had certainly a bearish bar here, right? An inverted hammer. That is a bearish sign. What do you expect to happen? Let's say we don't see this, okay? We don't know what's happening here. What do you expect to happen at this point in time? After you see this price action, it's digested enough, we get a kind of a breakout and certainly inverted hammer, a bearish sign on this daily chart. Remember, daily chart is quite an important chart and certainly a valuable chart. What do you expect to happen from this bar here? Answers in the chart, in the chat. Nobody? Yeah, exactly. Exactly right, Mark. You expect the market to move to the downside, right? You'd expect that because very basic trend theory is impulse, corrective impulse, right? And the price action we're getting here is digested from this impulse. We think about the 70-30 rule. Okay, markets trend 30% of the time, markets digest 70% of the time. approximately. So we can see here, we probably had a week or something of movement to the downside, and it's taken some time to digest that. But what then happened yesterday, if I remove this, is we get this, again, this bullish hammer sign. Okay, so when you're expecting that move to the downside, certainly from a conformational bias like this hammer coming on increasing volume, but we get this, it puts a little bit of doubt in your mind of this continuing to the downside because you're expecting this to melt down. Okay, but not only did we get this bar, what have we got this bar in terms of, I mean, everybody's going to have a different answer to this, but what also do we have within this bar that adds to that kind of unsure that this is going to move to the downside? What adds confidence that maybe Euro USD wants to move up? Yeah, you're all right on that one. But what are we thinking? What are we thinking now? What kind of gives you a little idea that maybe Euro USD from this particular bar wants to move to the upside? Move to the downside was very corrective and respected support. The move to the downside was very corrective and respected support. Where do you mean here, Newton? Yeah, I'm talking from a purely technical perspective. So remember, with technical analysis, the basis of technical analysis is that everything that's known in the market is respected in current price, right? So that's good enough for me. So, okay, I'll tell you the answer. It's increased volume. So look at the volume coming in on this particular bar. So again, you're having this. You're having at this point in time, you think about the psychology of markets, you're expecting this to fall. We've had impulse, corrective. You think about Dow theory, primary trend to the downside, secondary trend, corrective, and then we continue with that. But we've got an immediate rejection from breaking out of this corrective. We've got higher volume coming in, again, putting doubt in the minds of Euro USD seller, and we get a reaction like we have right now. So it's important to know, and this is why I think volume is great to look at. Where does the volume come from? Institutions. Who moves the markets? Institutions. We got, us as retail traders. If we put everybody, all us retail traders in a room and we clicked sell the Euro USD, do you think we're going to have any effect on this market? No. I mean, I'll answer the question. No, we're not. So volume, I think, is a great indicator, and that's just a little good case of what I kind of look for, and why my bias to the upside was. I mean, it was I don't get everything right, but that was ultimately right on Euro USD. But I didn't make any money from it because I didn't get the setup. As I said, I need a kind of corrective in there. Wick, how can we escape from this kind of fake breakout? So Arun, the normal thing I would say, okay, if we look at, and I'll give you a good example because somebody asked me about this yesterday. Okay, I'll give you a good example. If we look at New Zealand Swiss, and Euro USD is probably not the best example because the chart wasn't looking too bad for a move to the downside. But when we're seeing these massive extensions, certainly on a higher time frame perspective, this is where we see a lot of fake outs. So this is where my premise of, I call it RTM, is basically ready to move, is a chart ready to move. And looking at New Zealand Swiss yesterday, if you look at this wick, that has certainly trapped some retail buyers that want to buy New Zealand Swiss to the upside because it's risk on, etc. But what they're not understanding, or what they're not grasping, is that we have already had that move. When price action gets a little bit too extended, that's where you see fake outs happen. And I promise you, you'll see it time and time again. So even if you have a 15-minute, 30-minute, 1-hour setup breaking out from a certain structure, and you go over to the daily charts and you see price action that looks like this, that looks like, okay, let's go back to, New Zealand yen is another good example, right? That looks kind of like this. Actually, that's not a good example, but New Zealand Swiss is probably the best example, sorry. This is where fake outs occur. So RTM, using a simple thing like a 20-period moving averages gets you into trades at the right time. I'll see if I can give you, okay, I'll give you an example of that. I'll show you a trade that I took from quite some time ago, which was the Swiss yen. I'll see if I can find it. And then I'll go into your charts, etc. I'll do all that in a second. But I think this is an important concept that some of you might not know. It was probably later point of last year here. Yeah, I'll go into your charts after this. I'll go into charts. I've got one thing that I'm looking at, then I'll go into your charts as well. So my setup on Swiss yen, okay, was back here. I've got a larger V reversal, a nice corrective in, a push through, again, V reversal within a V reversal within a V reversal. The essence of the context is that we've rising pressure into that area. Okay, we've got crossovers of that moving average. You've got crossovers of that 200 MA, which is good. We want to be on the right side of these moving averages because they're areas of dynamic support to price. Okay, so we always want to go, majority of the time, we obviously want to go with that trend because the trend is our friend. Okay, but if we look at, and also a little bit of a note here, Swiss yen is my favorite pair, right? So Swiss yen, I know in terms of fibs, if you like the fibs, likes the 38.2. So this movement down here was actually hitting the 38.2. This push down here, this actually hit here, the 38.2. So it's an important concept in terms of knowing your pairs and like knowing how each individual pair works. It's called market characteristics. So that's something that is if you don't know, you know, you're taking a trade on a certain pair, write down the characteristics of it. You know, GJ moves differently from Kiwi dollar. Gold certainly moves differently from Euro USD. You know, so that having the characteristics and how they move is also a great skill that you can have. However, what I'll do is I'll go back to the weekly chart and I'll show you exactly where I took this trade. Okay, so we look at Swiss yen. Forget what's happening here. Let's block all this out. I always remember, I'm so selective that I always remember my trades. But we can kind of say we're moving in an uptrending environment, right? So we're pushing on, we're corrective. We're pushing on, we're corrective. When I took the trade, it was simply around here. Okay, so we've come from impulse, corrective. It was after this outside bullish engulfing on the weekly chart. Okay, we also had that outside bullish engulfing on a little bit of increasing volume. It's good. What we use volume for, or what we can use volume for, there's a few different things. But one of them is certainly volume coming in at the potential end of a corrective or end of a pullback. Again, we add our fibs in, we add our 20-period moving average in. We have multiple confluences that potential pullback is coming to an end. We can use volume on climactic moves up here or exhaustive moves up here, but that's a topic for a different day. But volume is great to figure out when are the institutions potentially buying this up again from a longer-term uptrend. Okay, so ready to move? In terms of the potential? Absolutely, because we're looking to get involved in big moves. And that's exactly what happened with Swiss yen. It moved quite swiftly and very nicely to the upside after that outside bullish engulfer. We've also got, you know, an ABC in here, which I do like. And then there we go. So this is where you want to be involved in trades. You know, this is where you want to be, pullbacks or you know, breakouts that are not extended into key levels, not buying the entity Swiss up here, for example. Right, so that's my long-winded answer to your question. Who asked the question? Arun. Is that look at higher time frames. Use your knowledge of price action. Just very simple stuff to make sure you're not getting involved in silly breaks. You know, you see breaks of key areas. Let's just give you an example, right? If you see any kind of break from key areas that is breaking from deep. Excuse me, my girlfriend is hoovering. Let me just close the door. Excuse me, guys, sorry. So if you see any breaks from deep, this is where price is often susceptible to a fake out. Okay, so there's a little tip for you today. Concept of ready to move. Make sure when you're placing a trade that that currency can move quite some way and capture the most profit. Sorry, I was in a little groove there. I've missed some of your messages. The correction is well, Elliott Wave. Yeah, I'm not a big fan of Elliott Wave TTC. Personally, I looked into it. You know, again, it's just not something that resonated with me, to be honest, mate. Not saying that. There's a lot of people that trade profitably. There's many ways to trade a market. It just didn't really fit right with my personal understanding of the markets. You got caught out trading USD. That's CAD Swiss, the long wick. What moving averages do you prefer? Simple, exponential, smooth? Simple. I'm simple. I'm a simple man, and I like the 20 simple and 200. That's all I have. my strategy is based on price action, and but I use a 20 simple, 200 simple, and volume. That's all I use, and it works for me. It works for me. Okay, I'll go into one that I'm looking at today, and then I'll go into your charts. New Zealand yen. So daily confluence, yes, it's a counter trend idea, but I have confluence with this particular candle here, i.e. seems to be a slight rejection to the upside, possibly exhaustive buyers in this New Zealand yen, and we could be involved in a pullback. So what I'm looking at is a breakout retest of this area that I have identified. So again, if I talk about the context that I like, V reversal, cut with handle, or head and shoulders, we've got our V reversal in here, right? We've got a corrective from this latest impulse, so we don't want to see this break. Okay, we've tagged the area again. Remember, as a breakout trader or a breakout retest trader, I want this level to become less significant as time goes on, i.e. our squeeze into the area. Because again, you think about the psychology of markets is that if you've got a buyer here, let's say, that has bought it at this key level, they've had a pretty decent profit here, right? Oh, so he says, so let's call this guy Jiminy Bob. I don't know why I said Jiminy Bob, but anyway, his name's Jiminy Bob now. He's got decent profit buying off this support level. Okay, he comes back here and Jimmy says, do you know what? I did decent profit from this area. I'm going to buy it again. But he's getting less out of it as time goes on, right? So you think about the psychology of Jimmy. He's going to say, well, I might not place my buy orders at this point here. And we're seeing that level becoming less significant, i.e. knocking on the door, and eventually it's going to break down. And that's what we got in New Zealand yen. So what I'm looking for, again, if you're a breakout trader, I'm not a breakout trader on the 30-minute, 1-hour chart. I am on the 4-hour daily. What I'm looking at here is a breakout retest, move to the downside on New Zealand yen. So that's probably my pick of the bunch. That's the only one that I was looking at over the US session. The other ones that I was looking at, I've kind of gone, to be honest with you. But that's my pick for today. Volume spread analysis. Can we? That's a topic in itself. SM. It's a topic in itself. Can we? Okay. So I'll go through the pairs that you want me to look at. What have we got? Okay. You put them in the chat now. Whatever you want me to look at, and I'll go through them. I can't go through all the other messages, unfortunately. Okay. I see Euro Pound. Let's have a look at Euro Pound. Let's have a look at Euro Pound. How's everybody's trading going, by the way? Are you trading well? Are you not trading well? Are you finding these conditions difficult? Have you learned anything? And here's a good example. Here's a potential good example of what I was just talking about. Look at where the moves come from, right? We've come from deep, breaking out of a significant zone. And what seems to have happened? Right, a fake out. Do you know what? I'm actually developing a fake out strategy. And that would probably be pretty prime for that. Right, we've broken through key areas, possibly trap retail. We don't want to be going long here. We'd rather be seeing some corrective price action before this, a little bit of accumulation before a break, i.e. making the trend healthy. So in terms of Euro Pound, I wouldn't be surprised if this moved to the downside before it moves back up. Because, again, you think about the stop punt, okay, which happens a lot of times, the stop punt. So if retail, remember, 95% of retail are not profitable. So if you're getting trapped long in Euro Pound, if we go down to smaller time frames, right? We go down to smaller time frames. What you often see, and maybe this is not a great example in terms of stop locations, but let's say you had a little movement here before a break. What you'd often see is price action. Come here, clipping, and then move back up to the upside, right? Just because you're taking a break, which I just think is a bit too extended. Again, use that 20. Look at the gap between price action and then 20-period moving average. Price doesn't like that. Price doesn't like that. So Euro Pound, my bias would potentially be this before movement to the upside. If you look at it from a daily perspective, maybe you're looking at this, head and shoulders on the daily. It has been on a pretty decent downtrend for quite some time. The euro does like movements like this, though. Certainly when the euro's weak, you'll often see the euro move up and kind of sold into quite dramatically. Whether we get that again, could happen. I mean, that could happen. So yeah, I'll say my bias for euro pound is a fake out, and then let the market tell you once it wants to do. For euro pound, in my opinion. Pound Aussie trader X boy, pound Aussie. Let's have a look at pound Aussie. Just passed your FTMO challenge. Well done, buddy. Well done, mate. That's excellent. Don't discredit how difficult those challenges are. Let me tell you from personal experience, they are very difficult. And if you look at the numbers, the FTMO don't put the numbers out, but if you look at my Forex Fund's numbers about the actual percentage of people that make it to their first payout. Actually, here's a question. What do you think the percentage is of traders, retail traders like you and me, that do a My Forex Fund or FTMO challenge, whatever it is, and make it to their first payout? So, i.e., they pass the challenge, they pass the verification, and they then make money in the first month or whatever and take some money out. What do you think the percentage is? And if you don't know it, I'm sure it'll shock you. Any guesses? 5%? Nope, it's lower than that. 1%? No, it's lower than that. It's lower than that. Okay. A few more guesses. 1.5? No. Any more? 2%? Nope. It is 0. You're close, Ben. You're close. It's 0.09%. 0.09%. That is it, the percentage. But also, this drops off after the first payoff. So a lot of people get their first payout. They take whatever, 10K or whatever it is out the market, which you shouldn't do. You always create a buffer. Always create a buffer. But yeah, 0.09%. Unbelievable, right? Unbelievable. To keep yeah, I mean, this is it. And this is what I say. The hardest part of these things is keeping them. Keeping them it proves you're consistent. Getting them, you can have a couple of days. You can have 1 or 2 months of great trading, right? But to keep them, it is difficult. Why do people do it? I mean, it's the only way certain people or certain individuals can get capital. I think they're great. Don't get me wrong. I think they're great, right? So as long as you're consistent, a lot of people do them when they're not actually consistent. I did them when I was not actually consistent because I was wanting to chase that 100 grand and now the 200 grand or whatever. I must have done about 10 and I failed every single one because you're kind of thinking like, oh, if I had a 100 grand account, then I'll make this amount of money. I'll make this amount of money, right? But I wasn't ready to do them then. Absolutely not. Absolutely not. But I think if you are consistent and you can honestly sit there and say, right, I'm consistent over a period of years, we're not talking 1 month, 2 months, we're talking consistently profitable, then they are a great tool. And there's more popping up. Yes, okay, it's hard to find because of what happened with, was it Funding Talent? I can't remember what that one that went under. Funding Talent or Talented Traders? I can't remember. Anybody remember the one that had that big stuff come out? They weren't paying anybody out. They basically went under. I believe most people tend to blow their accounts because it's really not their money. Yeah. I think it adds additional element to your trading, right? These because of the time constraints, it certainly adds an additional element. And you could be the best trader in the world and not pass them. I've failed a verification quite recently on my 200K. So. And this is the thing. I did this 200K. It started like August or September of last year, right? I was getting my free repeats on the challenge because, as I said, I consider myself kind of a blue chip trader. I'm not going to have any thrills. I'm not going to have any massive drawdowns, but I'll be in the market for years and years because I trade the way that I like to trade. So it took me 6 months to pass that challenge. I passed it in January, and then obviously I started it just before the Russia-Ukraine situation. And I couldn't take any trades. And personally on my real account, I'm not taking I've taken 2 trades this month because nothing is really setting up. I think it's getting a little bit better with certain pairs that you can pick apart with the ones that you've not got involved in. So I've missed out on the big moves on the yen pairs. And then you have to end up going for it. So I just had to end up going for it because I had the time. I froze it for a week. I just, and I don't consider myself, and that's difficult because it took me a long time. It took 6-7 months of my life to get to that point. And it doesn't mean that I'm a bad trader. It essentially means it just wasn't the time. So FTMO doesn't define you as a trader, but once you have it, once you get the buffer, then it's great. It's great. I was really lucky. How long did it take you to be consistent? 2.5 years, uncle. 2.5 years. 2.5 years of pain. 2.5 years of pain. And it does, I'm 7 years now. So as you kind of go on, and the last 2 weeks without verification was difficult for me. Like, I was annoyed. I was pissed off. So, excuse my language. I certainly was, because I was like, I've just done this for 7 months. I've traded consistently. I've traded very well, as I kind of normally do. And got caught in a horrible fundamental situation where the markets, went a little bit wild for a while. And for my personal strategy, needing a bit of a momentum or for fluidity, let's say, movement and follow through, it ain't good for me, So, hey, S happens, right? I just do it again. And, my personal goal, I've always said this, my personal goal is to get $1 million in funded equity. And I'll just keep doing it. I'll just keep doing it until it goes there. I'm strictly a swing trader. I passed the verification stage this morning on the 10,000. Well done, buddy. Excellent. Well done. Well done. It's a very good achievement. I think so. I think social media and certain parts of YouTube make it seem easy, but it's a very good achievement. So well done. Well done. So what's your advice for someone who has $1,000? Take the challenge or trade the money? No, I think trading off, and this is, again, I don't know how to pronounce your name, mate, but you have to be truly confident in your ability before you start one of these challenges. So no, I don't think there's any point personally in trading off $1,000, $10,000. I just don't think the reward is worth the effort that you're putting in. And I think that's where certainly a lot of retail would end up revenge trading, because they want more money. They see this stuff online. Look at this person's got a Lambo. This person's made, flipped account from 10 to 2,000 in a day. Like, all that stuff is kind of toxic in trading. And it just makes it such a difference between the realities and nonsense, basically. So my advice is if you are consistently profitable, I don't know whether you are or not, I would rather use $1,000 and, go for a funded challenge, personally, if you're asking me. But that's just my advice. I got overconfident after such a great state. Yeah, I can't say it. I won't say your name, but I was at my worst. I remember writing a load of things on my trading diary. I was at my worst when I had a good trading month or a good trading week, right? I would be dangerous the week after, because I think I've cracked it, right? I think I've got it. And this is talking about when I was, the first 2.5 years, right? I think I would got it. And I'm like, right, that's it, I'm off. And then what happens the next week? You lose your first trade because maybe you're trading on a Monday when you shouldn't really be trading on a Monday. You're forcing things, thinking, do you know what? This is going to work because everything last week or everything last month that worked. And then it all comes crashing down. So I remember in my first 2.5 years, I put in, this is true, I had a $75,000 account. Okay, no, this is genuinely true. That $75,000 account went down to 16,000, right, in the space of a couple of months, just because, I was an idiot, absolute idiot. When I had 16,000, I took that account to $30,000 in 1 month. Like, I had an unbelievable month. I couldn't get anything wrong. The subsequent month, the month after that, that account was blown, because I went to on Monday. I took 2 trades on a Monday, lost them both. I think I took a trade on a Tuesday, lost it both. And then my head was just gone because I lost a lot of the gains that I made from the month after. And it's just, it was done. It was the lowest point in my trading career. That was horrible. Yeah. So failing an FTMO verification is a drop in the water. Trust me. What are the easiest currencies or indices to concentrate on if you are a beginner? Probably the majors, Cooper. I look at every morning. I look at the SPX to get my risk sentiment. I also look at it because I like to put money into this index on a monthly basis. So I actually put some money in down here, which was, it's a long-term investment, but you're kind of gauging risk on, risk off, and then I would stick to the 8 majors. I personally like the exotics. I love USD ZAR. I really like USD SEC, USD NOK, USD Mexican. I like as well. I would maybe avoid gold to start off with, but go stick to the 8 majors. Stick to the 8 majors. Do both. Pass the challenge and use your 1,000 for a personal account if you are disciplined. Yep. Oh, sorry. Sorry, I'm not even done pound Aussie. Sorry, mate. Okay, let's go to pound Aussie. Pound Aussie. Also, guys, if you like my content, I'm 25 subs away from 1,000. My channel is there, RT Forex. 25 subs away. If you want to give me a sub, that would be lovely. And remember to like the video if you like the video. Let's get what we on. We got 90 people watching. Let's try to get 40 or 50 likes, shall we? So if you're not hit like, smash that like button. Okay, sorry, pound Aussie. So pound Aussie is another one that has moved massively to the downside. Okay. What am I thinking? Do I want to sell it here? Probably not. Do I want to buy it here? I don't think the market's given me a reason. To buy this yet. If we end up closing quite strongly on a daily basis, then tomorrow I could look at potential longs in pound Aussie, of course, if it sets up. We have a little bit of bullish price action here on the 4 hour. As I said, I do think it's massively extended to the downside. I don't really like what it's doing now. And if we look at this, it's kind of gone into that zone, right? So what do I think of pound Aussie? You would need to let this digest a little bit. So I like the idea of potentially buying a pullback, but it needs to neaten itself up. So he's pushing on here, it's coming back down. What bias have you got? Who's asking me about pound Aussie? Trader, what are you looking for? You're looking for it to rise? You're looking for it to fall? The path of least resistance is the downside, but I just couldn't bring myself to sell that market. I couldn't. So, sometimes if you look from a 4 hour perspective, sometimes these decent bars or these larger bars do get some digestion in between before they move. But if we drill down to the lower time frames, it's just looking a bit of a mess, mate. A little bit of a mess. Thank you for the gems. It's nice to take. I appreciate that, mate. No problem. Max, I'm lost. What verification challenges are you talking about? Okay, I'll go for a very quick explanation, Max. I'll talk about it probably more on another stream, but essentially it's the major problem with a lot of retail is the lack of capital, right? And obviously with trading, the more money you have, the more you make. We're not trying to flip small accounts. We're trying to grow accounts consistently and slowly. Obviously a little bit quicker than the investor side, but a good average trader, would probably live between the 10 to 40, maybe a little bit more range per year. Now, obviously that 10 to 40 is more on 100 grand account or 200 grand than it is on $1,000. So these funded accounts or these firms basically is like if you are a sports person and you go for a trial, they do the same thing. If you're a good enough trader, they give you a challenge, a 30-day challenge where you need to take 10% or whatever it is. And if you pass that, you go into the verification, which is for FTMO, for example, it's 5% in 60 days. And you pass that as well. You adhere to their rules, maximum daily drawdown, etc. They give you up to $200,000 in. It's not real money; it's actually demo money. But if you make money, off that, then you make that profit. Essentially. I'm looking for what about EuroCAD? I'm looking for a buy order for pound Aussie. Okay. Yeah, I can see why you would do that. I just think it's a little bit messy. I think there's better charts out there. How do you close the gap between your back testing results and your live results? Because I'm getting good trades when I'm back testing, however, lose when I'm live. That's a good question, Mofi. I think you'll always find a slight drop off in your live trading. What you can do from your back testing is you can go into forward testing. So, for example, for me, I wonder if I can bring this up here. I'm currently forward testing an aggressive strategy, right? So this is a new strategy that I'm personally developing, and I'm doing this on live markets because I think backtesting is great. Don't get me wrong, backtesting is great, but there's sometimes in backtesting where you kind of go forward, right? You can kind of cheat it a little bit, and also you're not going to be the charts the whole time you're backtesting, right? So sorry, I've just lost my chain of thought. So this is why I also think that after you back test, go and forward test on a demo account and do it that way as well. It gives you a little bit added confidence. And that's what I'm doing with this aggressive strategy. So I will talk about this aggressive strategy. I think it's very exciting. I'm actually in this USD yen. So USD yen down here, I was in it on, again, this is not real money. This is still in the testing phase from this bar down here. So my aggressive strategy is basically selling a candle from certain context and then doing one trade and using this SAR for my exits. So right now on this one, considering I risk 2% per trade, I think I'm up about 6%. So I'm just waiting. I love this SAR, by the way, if you don't know about this, as a trade management or exit indicator. I'm waiting for this dot to come above and then I exit that trade. So yeah, I would say forward testing is great. Obviously, the emotional side is maybe that would be my biggest tip, mate. To be honest with you, send me Mofi. Do you have me on Instagram? Send me a DM on Instagram. Because there's a lot more facets to it. I'll try to help you out. Any tips for using TradingView? I don't use TradingView, mate. I use MT4. I'm an old school man. I use MT4. I've never used TradingView before. Where are you from? I'm originally from Aberdeen, Scotland, but I live in Dubai. Interesting going long on Aussie yen. Don't know if I like that. Don't know if I like that right now. But maybe. I mean, if something fundamental comes out that is good for the markets, then yeah, this could kind of go out with technical analysis. 4 hour doesn't look too bad. I'll give you that. But this bar hasn't closed. This is certainly still a bearish bar. I'm just fancying some daily correctives. You know, I'm fancying a little bit of daily corrective from this. I mean, look at that move. Look at that move. Surely we need a corrective at some point. I know the saying is don't catch a falling knife. I get that. But we have had some rejection yesterday. So, I mean, if it fits your strategy, Bronx, then it fits your strategy. I mean, that's the main thing. I just would be a bit worried about the position if you are long or going long. Can we use volume here for more confirmation for direction? Okay, if I'll do a separate volume, maybe I'll do that next week. I might do a separate volume workshop next week because it's a big topic in itself, and I've done 45 minutes, so I probably can't stay on for too much longer. Past FTMO today. Well done, mate. Nobody. Well done. Any tips for getting consistent? I think experience. You know, there's no substitute for experience. You know, you remember the bad times, you remember all the pain that you go through. I think blowing accounts is a rite of passage. You know, some traders are good traders like myself because they've been just terrible traders for a long time, and that would certainly help me. Back testing is important. You have to do your back testing. Forward testing would be important as well. One thing you can do is what's called the 21 trade challenge. So a lot of people, this sounds so easy, 21 trade challenge, 21 TC, right? I guarantee a lot of people won't be able to do this, where they stick, as long as you have an entry criteria and you've got your entry checklist and you know what your strategy is, right? See if you can do 21 trades sticking to that strategy exactly. And I promise you, a lot of people, I couldn't do this for a long time. A lot of people can't do that. So that will help you. They say 21 days builds a habit, right? And that's just where the 21 trades comes in. So That's only if you have a strategy. So if you don't have a strategy, it's all irrelevant. You've got to go and get one, and you got to find your edge. You got to be the casino. You not got to be the gambler, and then do this, and that'll help you with your consistency. Where do you see the sentiment of the day? Well, it's risk on. It is risk on from a daily perspective. You know, but we might just get a bit of pullback. So it's not real money. Where do the profits come from? Well, FTMO companies like FTMO and my Forex funds make an unbelievable amount of money from failing challenges or failed verification. Unbelievable. You'd be astonished the amount of money they would make from that. So with the finite, remember the 0.09% actually make money. 0.09%. So that money, whatever they make, even if it's a 10K or 20K withdrawal, is a drop or nothing compared to the amount of cash FTMO and my Forex funds make from challenges. Trust me. Sorry, I'm just going through the questions. What's your YouTube channel again? It's rt.forex. rt.forex. Can I subscribe? Thank you, mate. Getting close to 1,000. Getting close to 1,000. rt.forex. Instagram's the same, Mofi. rt.forex. I'm about to take another 10,000 challenge with FTMO and use that strictly. Yeah, I'm about to do a 200K with my Forex funds. I'm not going to start yet. I'm going to wait until the markets are a wee bit better before I do it. So maybe next week or the week after. Biggest tips for discipline. I feel I have an edge in the market, but my discipline is terrible. Discipline. Well, maybe a 21 trade challenge. Honestly, I think that is a great place to start. 21 trade challenge builds that discipline. As long, if you've got your edge, okay, that's great. But just write it down in your diary. Write down a little notebook. The next 21 trades, I am only going to stick to my strategy, because it's difficult when you lose one. You want to get that money back, revenge, blah blah blah. The horrible feelings, the emotional side of trading. So just try that. That's what I would recommend. You're from Scotland as well, Livingston, Livy, Weesacks, good man. Just you at once, you'll never go back to MT4. Oh, with TradingView, I'm just set in my ways. I'm just so used to this now. I've got my routine and I kind of like it. So maybe one day. Here, look, NZD-JPY is potentially retesting. So this is what the two retests I like. Right, I'll go there. This will be my last thing before I go. Mark Douglas. Code in EA. Yeah, exactly, yeah. Trading in the Zone. Oh, yeah, there you go. Trading in the Zone. If you haven't read that book, read it. Absolutely read it. Okay, so what I'm looking for here, before I hop off, is the two types of retest I like are either an ABC. So we've got A, B, C, right? And a catalyst, i.e. an inverted hammer or bearish engulfer, Morningstar, whatever it is, coming on increasing volume, right? That would be my signal for entry. The good thing about it is if we've got that 200 here, the 20 period there, we've got that period of dynamic resistance to price. Okay, right now with this price action here, remember, we don't want it to come back and do this, because I don't like retests that basically look like a V reversal. Okay, we want to have nice price action, kind of like this. So if we get this into a complex corrective, get our catalyst on high volume, on that 20, on that 200, confluence with that daily for a counter trend trade in terms of an inverted hammer with a little bit of volume coming in. I think that would be a nice shot for today. If it does that. Okay, thoughts. I won't do any more charts, guys, because I've done almost an hour. Courtney, your take on gold. The only way to become disciplined is to practice discipline. Yep, MT4. Yeah, well done, Alex. There we go. Got another MT4 guy. Okay, I'll do gold, and then that's it. That's But yeah, I do think in terms of consistency, for me, it was just being terrible for too long that I just said, right, stop it. Stop it, Ryan. If you really want to be in this market for the foreseeable future, which certainly I do, I've got to get real and start and start being real in my trading and start stopping doing the things that 95% do. Get into my head the reality is that I'm not going to be rich overnight, and it started to get better from there. So what do I think about gold? I mean, here we go. We've kind of had a break from deep, right? So we've seen that twice today. Break from deep, wick rejection to the downside. It didn't look bad for movement down. I mean, with the dollar, I don't know whether that relationship is kind of endearing right now. I'm not really sure. Doesn't look bad on the daily. Be interesting to see how this daily closes today. My bias yesterday was gold shorts. But if we get something, if you get something potentially like this or a break and close underneath the area, I don't think it would be a bad shout. So in terms of directional bias, maybe a slight pullback before continuation down. But yeah, I don't mind. Oh God, I don't mind gold to the downside. Let's have a look at the weekly. Getting a bit of a reaction here. It's a tough one. It's a tough one to say. I would wait for that daily closure. Wait for that daily closure. I might sit myself on the fence. I might sit myself firmly on the fence on that one. Right, guys, let's try to get to 60 likes on the video before I hop off. And again, if you're not subscribed to me, I'll stop going on. I'll do a volume analysis workshop next week. I think that would be a good thing to do. But as I said, for me, I'm a London session trader, so most of the time I'm here. Most of my pairs or my trades are already done for. So I'll continue to look at the ones you want to look at, but maybe I'll make them more educational if you're happy with that. I was up 200 pips on Euro Aussie, but still kept it open. Had to guess if trade will run or not. That's where you need a trade management plan. You need to figure out what you're doing before you place a trade. Where you're taking your profits, where's your stop loss? Right, guys, I'm going to go. Thanks, everyone. I appreciate you being here. Remember to drop a like, and I'll see you all same time next week. It's Trading in the Zone, bro. Trading in the Zone. Thanks, guys. Take care. Peace.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And remember to check the description below if you're looking for a new broker, trying to get funded, or looking for a trading community to join. From all of us at A1 Trading, have a great day, and we'll see you next time.